Matt Boss, again, congratulations on being named #1 in retail on the street for however many years in a row it's been. You don't cover Wayfair, but you see Wayfair, and the stock is doing obviously great things today on the back of its earnings. And you think what as it translates into the stocks you do follow?
Yeah, thanks for having me on, Scott. And on the #1, I really appreciate that. JPMorgan, big win for them too. Just more broadly, I wanted to point that out. It's great to be at the best research house on the street.
All right.
Look, our view on research on retail right now is it's a no excuse backdrop. So I'm not surprised to see the results coming out of Wayfair. The macro backdrop, particularly the middle to higher income consumer, is on very, very firm footing right now. And what we're seeing from our data, the Chase proprietary card data, as well as our survey work, is that the higher income consumer is really fueling what we see as continued momentum in the overall broader landscape for consumer spending.
That doesn't mean that retail names at the lower end of the space can't do well, right? I mean, where do your favorites lie? At the top or the so-called bottom?
So it's actually very bifurcated right now, but what's dictating the winners versus losers is more the micro rather than the macro, meaning product improvement, value perception. And so what that means is off-price retailers, TJX, Ross stores, doing very well, and I think will continue. We're seeing best-in-class brands like Ralph Lauren and the Coach brand at Tapestry. Those would obviously be more higher end. So you're seeing winners at the low end, you're seeing winners at the high end, which is really coming down to company strategy, which in my opinion is really driven by leadership and who's making the right moves and who positioned coming out of the pandemic to get to where you stand today.
We sort of left, I feel like we painted every department store the same and we left them all for dead on the other side of the pandemic because trends have changed, behaviors are different. But yet you still like Macy's. Why?
It's a great point. So we initiated a pair trade into the third quarter and really through holiday in the early part of 26. It's long Macy's, short Kohl's. And I think that really speaks to the consolidation that's happening. You have what's happening between Neiman, Bergdorf, Saks, that I think Bloomingdale's stands to benefit from a branded perspective. And I think Macy's can be the branded destination. And they've made a lot of changes. They've cut the store base in half. And I think it's more of a branded destination for a consumer that has money in their pockets.
Mike, I mean, how do you look at this? It's exactly what Matthew has said. High end doing great, low end not so much. High end doing great enough that it can carry the whole show.
The aggregates are all pointing in that direction where it's kind of like an asset-based economy. It's kind of a capital over labor story. And I think the bigger picture is, again, I keep going back to the Fed and why it matters for this market. Because for months, it's been about Fed's going to cut rates in an economy that doesn't need it. Is that going to remain true? Are we going to be able to dismiss the weak job production that's going on in the economy for indefinitely going into next year? I do think there's also some comfort being taken in some of the known stimulus measures that are going to hit in the first quarter. We're going to have a big tax refund season. You're going to get refreshed on that front. And so maybe that's all you need. But right now, I think you're in kind of soft patch or at least kind of spotty footing for retail.
So we talked many times, Matt, about the Nikes of the world and whether it could be a turnaround candidate and at what point. You finally decided it was because you're overweight that name. Lulu has come up numerous times in that conversation. Do you feel like it's there yet? You have a neutral, and they just announced the big thing with licensing the NFL, which didn't go over that well.
My concern with Lulu is when you look at the marketing as a percent of sales, it's half of what best-in-class brands like a Nike, like a Coach brand, and like a Ralph Lauren. And so I think what really is working in retail is a combination of top-of-funnel marketing, meaning brand marketing, and Nike never stopped with that, as well as product innovation and newness. And so I think you have a rough patch from Lulu's side where they're talking about not having enough newness, not having enough differentiation, and at the same time, what they spend in terms of brand marketing is not at the same level as some of the others.
Does the deal with the NFL make sense to you? Some had criticized it, saying, well, is that really their target shopper? How do you view that?
Yeah, we hesitate anytime companies start to move away from the core. I mean, to me, what Lulu was great at was fabrication, newness, and innovation. And I don't know that necessarily the partnership with the NFL is exactly down that line. There's others out there. Abercrombie also has a partnership with the NFL, so they're not alone in this strategy.
All right. Well, we're glad to have you. Thanks for being here again. Congrats to you.
Thank you.